I've reviewed insurance for large projects with large national GCs, insured by large national brokers with the best risk management company administrating the whole thing, and found gaps in the coverage. There are people making assumptions at every single level.
Every single individual has a story to tell, and they're great stories that need to be heard.
I want every listener to know they have the ability to change the world.
Welcome to the 1720 Podcast.
What's up, Mound Movers? Welcome back to the 1720 Podcast. We have our friend Drew Boyd joining us. He's with Jefferson Maxey Consulting. And I think we're going to get into some fun stuff based on the pre-recording. We're going to have some fun. We're going to get some laughs. But then when it comes to risk and insurance, I think we're going to have some eye-opening facts here. And when you go scan Drew's LinkedIn profile, you see some things that get your curiosity thinking here with, what am I missing? What are the holes? What are some things when it comes to risk and insurance that I don't even know I should be looking for? So I have my journal ready, and we're going to probably get into the weeds on some of that stuff. However, your title on your LinkedIn does include having 6 children. So
yes.
So when I look at Stewie, I have 1 child. Stewie has 3. I ask him, how does he do it? And his evening calendar is busier than his daytime calendar. You're 2x him. How do you do it?
Well, I mean, I had 6 kids when I left the house this morning. I'm not sure how many there are now. But,
I think earlier you said something about a stack of kids. There's so many of them. They're just stacked up at the house.
A pile
of children.
It's just a pile of kids. And people are, when we go out in public, you can look to the left and right and people are going 1, 2, 3, 4. I'm like, it's 6. It's got just 6, Right. Right. And then I always get the questions like, hey, you know what causes that, right? And I just look at them and say, no, what does?
Yeah, there's a lot of dad jokes in there like, oh, it's something in the water, or as you guys said earlier, it's beards and bald heads that will cause it too. But yeah, there's a lot of dad jokes around how one might end up with 6 children's.
Yeah, we get it all. Are you Mormon? Are you Catholic?
Yeah.
Do you have a TV? I mean,
do you have a TV is hilarious.
We
Jordan Peterson goes on this, Ben, like once past 3, like it's like what do they call it? Team mentality, or like I forget what phrase he says, but they start raising themselves a little bit.
I will say, if you have a pile of kids, it really is nice to have girls first, and we did. They've been amazing. Like they're just natural mamas to the others and helpers, and the boys, it's kind of like, yeah, I'll help you if you ask me to. But they don't quite as quickly volunteer.
Yeah, and by help mean take away their stuff and beat them senseless. Like that's a boy's help.
Man, that's more insightful than you think it might have been. Like the whole idea of like a guy, a boy, a man will help if you ask him to. We could do a whole episode on that. It's not that I'm unwilling. I just like, I'm just gonna sit here until someone moves me off the couch. Like I'm not
right.
Just ask me. Speaking of risk management, see what I did there? That's a good parlay. Yeah. There's a few LinkedIn follows for me, at least, that anytime they post something, I'll stop down and read it, and you're one of them. And so I've been, just like the other 5 million people following on LinkedIn, I've been just like lingering and lurking and watching and reading, because you're one of them, man. Like when you post something, I'm like, oh, okay, I'm gonna stop down because, like I said before we start recording, I've been in the construction industry and doing risk management as a lawyer for almost 20 years now. But man, at least once a week, I'm like, oh, I actually didn't know that about some deep nuanced issues. So I reached out a couple of weeks ago, we talked, and I was like, we need to get you on because most of our listeners are in the construction space. And I think that they could really benefit from hearing from you about risk management and what the sort of entire panoply of that is. And then, some top 5 issues, or I don't even know where we go, just kind of turning it over to you to say that sort of thing. Also, let me give you another little pitch is I understand, your value proposition is you're not selling risk management or insurance tools. Like this is purely like from a consulting perspective, like a fractional risk manager, I think is what it says on your LinkedIn.
Yeah.
Just trying to help provide value, lean in, assess, all this sort of things, which I think is super important because most contractors, their first call is to their broker.
Sure.
Because their broker is someone who's going to help them assess or whatever. But this neutral third party approach is unique to me. And so I'm interested in hearing more about that. So I said too many words. I will shut up and say, Drew, tell us a little bit about yourself, how we get to this spot, and then we'll walk through what, kind of your top 5 or whatever, just kind of risk management, insuring ideas that you have that you're working on, chewing on these days. So turn it over to you.
Yeah. First off, Stuart, thanks for reading my stuff. I am glad to know that at least one person actually reads those things. And I do try to, always post stuff that would be very helpful. Fractional risk management is pretty simple. It's like you just described. Most larger businesses would have someone in their office that oversees insurance decisions, contracts, and liability. And that would be someone that works for the company. They're not an insurance broker. They don't sell any insurance products or benefit from those kinds of sales. But their job is to sort of evaluate those things and make sure that the company is, 1, protected, and 2, compliant. And as I do that sort of on an outsourced basis, it just enables people to sort of offload that risk and legal and not legal, but contract assessment part of it to somebody that they don't have to pay benefits and salary and all those things to. And I'm a fee for service guy. But that's my job. That's what I do. I dive deep into the insurance. I'm getting into the fine print of everything. Looking at the company's operational and contractual liabilities, and then telling them, hey, you bought a general liability policy. That's great. But you might be interested to know that you are an excavation company and your general liability excludes earth movement. That's kind of a problem.
Yeah.
I feel like those exclusions lie in there a lot, or in the classifications kind of feed through to an exclusion of some sort, and folks don't even realize it. The one I've seen the most is when you go from commercial to residential or quasi-residential. Like I build skyscrapers, and then all of a sudden you're building multifamily, and you got an exclusion in there. All of a sudden you didn't even know it, but you're uninsured. So it's things like that lurk in there all the time. Let me go back, because like I said, one of the sort of foundational points is, tell us, how did you get to this? Like what's your come up story that leads you to an expertise in risk management?
Oh, that's real easy. I couldn't keep a job. And people laugh when I say that, but it's really true. So, University of Florida graduate, wanted to be a teacher, loved teaching, taught at public schools, private schools. And every year it seemed like I just wasn't asked to come back, and they're, hey, we love you, man, but we can't afford to give you a full-time schedule. I had the superintendent for the county where I live calling around, setting up interviews because I knew him, and nothing. I didn't get one job offer. So I thought, I got to do something different here. Threw a resume up on monster.com. And of course, the turn and burn Aflac hit me up almost immediately and said, hey, we think you'd be a great fit. So, well, look, I currently have $0 coming in, so I'll take any opportunity I can to earn some money. And sort of through the prospecting process with some of these larger companies, found a consultant that we clicked really well. And, he and I hit it off, and he offered me a job, and I accepted and found out what I never would have guessed. I love this stuff. I mean, it resonates with me. I was early to work every day and left late. It was my dream job. And then that job kind of went away. And I was like, all right, well, I'm just going to do this for myself then. So I opened up shop in 2016, and I've been doing this now for the last, what's that, seven years, November,
little over 7 years
this month. Yeah.
Well, yeah. Before we spin into the risk and insurance, just like the life lesson there, that we might not have it all figured out, and it might not even be an opportunity we're interested in. But in order to find our purpose or go through some discovery, it takes some calculated risks and opportunities that you lean into that maybe you wouldn't have picked otherwise. Sometimes you just have to start, right? And go into something to figure out whether you like it or not. You can't just sit and wait and wait and wait. You got to sometimes just start, and that'll help you discover your gifts and your purpose.
Yep, I agree with that.
Well, there's an overlay too. I'll give you like a Jesus overlay too, and through a crazy Garth Brooks lyric. But remember that song? Anybody? Garth Brooks? They like, thank God for unanswered prayers. Like if Kevin, this doesn't hit for you, does it? Garth Brooks.
I just noticed you put Jesus and Garth Brooks in the same.
Yes, I did. Yes, I did. I am a master like that. But in any event, like that's sort of the story. I mean, I'm imputing, right? But like, I want this. But that closed door shows you know this, and you're like, well, I actually love doing this. I didn't know it, but for that door being closed, right? So there's some of that overlay to sprinkle on top of that story too, man.
Yeah, and it's looking at so the job with the consultant. I was let go, and it wasn't because of anything that I had done, but there was a family conflict, and it went very sideways, and it was really tragic. And I remember coming home and just sitting in my office at the house, feeling sorry for myself and just being sad and really praying, like, Lord, what do you want me to do? I mean, I've been trying to hold down a job, find a career, something that I could really sink my teeth into and put some roots down and provide for my family. And nothing's working. Nothing's clicking. Everything is just falling apart here. And I'm wondering where in the world you are and what on earth you're doing, because I know you're working, but it sure doesn't look like it to me. And as I looked up and I just was looking across my walls, and I just felt this sense of, why don't you just do what you love doing? What's stopping you? And I looked at my wife and I was like, hun, what would you think about me doing this and going into business for myself? And she said, I think that's a great idea. And I knew at that moment when she was right on board already and everything was go, I was like, okay, Lord, this is definitely you. So here we go. We're gonna dive into this thing and take the plunge. And I wouldn't trade working for myself for the world now. It's hard to get started and build, as you both well know. But once you do, it's just the most rewarding thing in the world. So
when you had a post, I'm scrolling your LinkedIn right now from a few days ago. I think it was your wife's. Was it your birthday? Was it her birthday, or was it y'all celebrating your wedding anniversary? One of the two.
Well, we celebrate 20 years on the 22nd, but her birthday was on the 9th.
Gotcha. And so the tag on that was, she supported me and encouraged me while I was, and I'm quoting, the world's biggest grump getting my business off the ground. Like that's a hard time, man. It's hard to get going. I know that's true.
Yeah. And when I say I was the world's biggest grump, that's not an overstatement. I was miserable to be around. And if I had myself on film, I would just be appalled. Everything was negative. Everything was grouchy. Everything was, oh, leave me alone. I got stuff I got to do. And, got to get up in the morning and fill out the stupid paperwork. And, all the, it's just, yeah, that was it. In 2 years, it took me before I got my first client. And, it was like odd jobs, working, earning very little money. And then somebody caught an article that I wrote on OSIP insurance. And she sent an inquiry through my website, who at the time was hosted by a company that I fired immediately because they never notified me. And then I found out about a month later and called her, and we talked for like an hour and a half. And I felt great about it. They sent me all their stuff. And when I sent them back what I'd found, they said, where do we sign? Help.
Yes.
All right. My pleasure. So they've been with me now for 5, I guess, years. And they've just been amazing.
Well, there's a lot of reward to being able to answer the call for help, right? I mean, I feel like that a little bit as a lawyer. Is just like people walk through that door right over there with the biggest problems, and I'm like, oh, I can help solve that. And there's a lot of reward in helping folks in those situations. So I get that idea too. It's just like, no, they needed a solution, and I could provide it. There's a lot of value there, and there's a lot of just intrinsic reward to be able to I'm going to go do this again. There's an endorphin kick in there too.
I'll say one other thing. So you had that God wink to start, right? That it's almost like the consulting that you do. Sometimes the advice is so simple. They're like, oh, just start. And that was like the kind of God wink, like you should do what you love. What held you in there for 2 years? That 2-year season of not landing an account, man, that's a scary season in the moment. Looking back at it in hindsight, you're like, yeah, of course it makes sense. But in that season, what made you hold on to the bar?
Well, the fact that I had failed to hold any other job for more than a year or two at a time, and just trusting that God really is good.
Ooh.
That was the big one. Like, I actually believe you're good, even though it sucks right now and I feel miserable and I wake up and I hate the world. There's going to be goodness out of this, and you're going to reward me if I don't give up. And I love doing this. And I felt like all of the things that had happened up to that point had sort of prepared me for this moment to say, hey, let's take this dive. Trust me, I'm going to do something great. You just got to hold on and walk into this storm with me, because what lies on the other side is amazing, and I want you to have it.
There's a great lesson, and we don't need to linger on it now, but there's a great lesson or perhaps even a thought around the lamentations of that too, right? Like we started at Risk Management, we ended up talking about Jesus, but there's a great study on, like, this really sucks, but I trust that you're good, and I just want you to know, God, I want you to know that this sucks, and I want you to know that I'm wrestling with it. But at the end of the day, I trust that you're good, and I'm going to wake up in the morning and I'm going to be right here again. And we've been talking about lamentations in our small group the last 3 weeks, and I didn't realize it, but I think it's like, somebody will correct me here, but I think it's like 1/3 of the Psalms are not like, hooray, God. They're like, why am I here? Like, just crying out lamentations. And so we sort of missed that for you, we missed that like 2-year phase of like, what? This is brutal. But I trust that you're good, and I'm going to stay in the fold, and I'm going to listen to your word, and we're going to make something great out of this.
So I'll briefly, because it applies. In 2021, I had what I call a 180 moment, where the Lord just took my shoulders and turned me around and said, look what I did. Because in 2020, our family just went through a really big tragedy. And I'm not going to get into what that was, but it was bad. It was probably the darkest time in our lives. And I was able to be home with my wife and my kids and walk beside them through the grieving process and just be present. And, had I had a 9 to 5, that never would have happened. I would have been away. And so, as I'm driving out of my neighborhood one day, I just start weeping because the Lord brought this to my mind. And so, the 2 years and all the struggle, I just stopped my car and just raised my hands, and I was like, thank you, Lord.
That's a great moment.
Thank you.
Yeah. What a great moment. Yeah. To just have to have the metaphysical, I don't know what the right word is, like hands on the shoulders, like turn around and just say, look.
Yeah.
Like you hadn't thought about it in a minute, but look. And to have the moment, and then to have the awareness to be thankful for that moment and all that, man, that's great. That's a great story. That's a great moment.
Yeah. Well, it's just an evidence, for the people that are listening. I mean, there could be somebody in that exact scenario where they're in the middle of the 2 years of suck, and they're like, dude, every day I just want to throw this towel in, man. I just want to quit. And I just want to encourage those folks, don't do it. Just don't do it. Hang in there. Trust God. He will come through. He is working, and good things are, as we say at our church, the best is yet to come. Oh, yeah. It's on the way.
We could end it right there, Kev. We could just be like, boom, run the war drums. Like, what a great, like, poignant moment of all of it, right?
Oh, there's one person, it's total God moment that is just screaming in my head. I'm not going to call this person out.
Yeah.
But as you just said that, I'm writing this person's name and writing needs to hear the first 20 minutes.
Yeah. There you go. Man, I'm going to do the impossible, which is like grab the steering wheel and yank it to the left and go hard pivot from Lamentations to Risk Management. Can we do it? Like, just yank the steering wheel. Walk us through just like some of your hot topics right now. And if you have some that live in contractor space specific, that'd be perfect. But like some things that you're working on, thinking on, advice for folks who are trying to manage their risk or don't have any idea what's in their policies. Walk us through some of those big ideas, and we'll be curious throughout the process here.
Yeah, sure. One of the things that I would start with is to say that it's important to understand the difference between a requirement to have insurance and an exposure. And, for some of the smaller guys, they go, well, I may have exemptions for workers' comp, but I don't have to carry it. I'm like, okay, that's fine. But you need to know that you could still have a claim that is workers' comp. And if you don't carry workers' comp, you're just choosing not to have insurance to pay the claim.
Right.
So, you're choosing to not be covered. And I think a lot of times for the smaller contractors that are just getting cranking, they're under the impression that, hey, if I don't have to buy workers' comp, then that's my get out of jail free card. Like, no, it isn't actually. You're going to find yourself in a really tough spot. Most of the bigger contractors, that's not an issue, but that spills into the contract side of things. And as they're looking at these job contracts and it says, hey, you have these insurance requirements, but you could have a claim that is more than what the insurance requirements are in the contract. So maybe you've got $3 million of liability insurance, but you have a $5 million claim. You might be required to or not required to insure the materials that are stored on the job site awaiting installation. But that doesn't mean that you couldn't have an issue where those materials are either damaged or stolen, and you have to pay out of pocket for that if there is no insurance to cover them. So understanding the difference of I'm required versus not required versus I have an exposure. And I tend to look at, contractually, you have to meet the requirements. That's the bare minimum. If you don't have what's required, then you're in breach. And when you're in breach, they can unleash all sorts of horror. And it's they can withhold money from this job. They don't have to pay you. If you're working on multiple jobs with the same contractor, they can withhold money from every single job that this job has really nothing to do with. If you're in breach of contract and they have to remedy that somehow. So it's very important to be compliant with the contract because it just avoids a ton of headaches.
From an exposure perspective, I mean, obviously that's company to company specific, right? I don't need to have this policy or this exclusion matters or doesn't matter or whatever the case may be. How do you go through figuring out how you're covering theoretical or potential exposures? Or let me juxtapose that against everybody, or it seems like lots of people just get blanket cookie cutter, this is the policies, I'm punching these out for everybody. There's a difference between that approach and I need to understand your business better so that I can help you manage against and insure against your actual exposures. How do you work through that?
So a couple things. The most common question that any insurance professional is going to ask is, how much insurance do I need? Like, that's a question with absolutely no answer.
Correct.
And that's not entirely true. I look at what are we trying to protect? What could someone take from your business? And then how much money do we want to have available that isn't our money that can be used to make right something that we got wrong? So the answer to those two questions, when considered in tandem, I think gives us a pretty good idea of how much insurance somebody needs to purchase. So if you have a company that does $50 million a year in revenue and they've got, $3 million worth of equipment, a couple $1 million in property, you look at what we call the attachable assets, right? In lawyer speak.
I'm with you.
And say that, this is what could be taken from us that we need to protect. And then, the value of the jobs that they're doing are on average $5 million or something. Say, okay, what's a reasonable amount of liability coverage that we would want to purchase for these jobs, regardless of what the requirement is. We have to meet the requirement, but there may also be a need to carry more, just by virtue of the type of work that we do. And you can look at claims histories for similar companies and figure out, a reasonable number. If I'm a concrete contractor and it's a $10 million job and my contract value is 1.5, then a typical liability claim is probably going to be in the millions.
Right.
So I don't want to only have $1 million of insurance because I'm going to be up the creek without even a boat, forget paddles. So that's kind of the first piece. And then look at, what do they do? What does this company do? And when you say that, you say, well, I'm a carpentry guy. Okay, well, that just tells me you use wood, but that doesn't tell me what you do. What kind of buildings are you building? What industries are you serving? Who are your top clients? What are you signing contractually? What are you agreeing to protect? And what are you agreeing to assume in terms of somebody else's liability? Because that's a big, huge deal. If I'm a small contractor, and by small, I say relatively small, and I go work for a big national general contractor and I agree to hold them harmless, well, I've just taken on a significant amount of risk because I'm now protecting a company that does billions of dollars a year and I only do millions of dollars a year. So I have to consider that there's a lot going on. And I'll also be, of course, holding the developer harmless and maybe the architect and the lender and a host of other people. And so what does that look like? How does that change the risk profile? So there's a lot that goes into it. And then, of course, once you start getting into the actual policies, as you mentioned, Stuart, you find these exclusions and you say, well, this is going to be problematic, because if I'm a foundation repair contractor and I have an exclusion for damage done by any work that was done underground, that's not going to cut the mustard. You find things like this all the time in these policies. So when you get the shelf product policy, because that's a standard exclusion on a lot of general liability policies, and it's not on everyone, but earth movement and subsidence, you see fungi and bacteria, you see OSIPs excluded, you see residential work excluded, just things like this. And so for one contractor, maybe those things aren't an issue, but for another contractor, they're a nightmare. And so they have to be careful for those things.
One of the things you're talking about, I'm just taking notes, so I don't know how to connect back the dots, but it was the idea of your policy and your policy overlay and your protection schemes and your risk management schemes and all this. They have to morph as you grow, because that policy that you got 5 years ago may no longer be reflective of either the work you're doing, your attachable assets that you have, the locations that you're operating in, et cetera. And so unless you have someone who's like actually sitting down with you and reviewing what that overlay looks like on an annualized basis, or perhaps even more often than that, you can't always just run it back. Like whatever we had last year is fine again. No, it's probably not. You've grown, you have a larger workforce, you're doing something different, you're in a new niche, you have a different risk, you bought a new piece of property. All those things need to be assessed through the renewal process. I mean, tell me how to manage that, or maybe I'm wrong. You can say, Stuart, you're wrong. That's stupid. But help talk us through that.
You're absolutely right. And renewal you bring up a great point there, Stuart, because so, for example, the client I mentioned before that has been with me forever, we've done 5 renewals with him now, and every year at renewal, new exclusions show up on the policy that weren't there the year before. And then, in terms of auto, this year, we got the renewal. I always ask for all the paperwork before renewal. I want to see everything. So if there's going to be anything new on this policy that's not currently there, I need to see it before we bind this coverage so that we know what we're doing. And of course, I get all the forms, everything looks fine. And then lo and behold, the policy comes out and there's 3 drivers that are excluded by name from the coverage. And I called them up and I said, guys, this form was not included in what you sent to me. And they said, oh, well, we don't run the MVRs until you agree that you want the coverage, because, we don't want to spend the money if you're not going to buy the coverage. I said, okay, well, that's fine and very understandable. But here's the problem. My client has been exposed for 9 weeks. And we had no idea. So if one of those guys had gotten into an accident, you would have denied the entire claim, and that could be millions of dollars. And we asked you up front to make sure that we weren't missing anything. We were missing something super significant. And then, of course, as it turns out, those 3 guys should never have been excluded to begin with, because California, when they do motor vehicle reports, they list failure to maintain personal insurance as an accident financial responsibility. So the underwriter ran those MVRs. Oh, these guys have had accidents. We're gonna exclude them from coverage. So I had to go back, get the information from the California DMV, submit it to the insurance company, and say, hey, I think there was a misunderstanding. And sure enough, they were fine with it. They put them back on the policy, no problem. But that's just an example of things at renewal that can just go sideways. And so often that's going to get missed entirely. Nobody's going to see that if they ever see it. And if one of those 3 guys had gotten into an accident before we had taken care of this, and it was a big one, I think the odds that the insurance company would come back and go, we shouldn't have excluded those guys in the first place, is pretty much zero.
Zero. Yeah. That would have been a exclusion, King's X, goodbye, move along scenario. And I say this sort of cheekily a lot, is that none of this matters until it matters. Huh. Like that exclusion who cares until Kevin gets in a motor vehicle accident and has a terrible, right? And now all of a sudden you're like, well, and you start flipping through papers and there's a missed email and you forgot to check a box. And so
right.
The importance of having some foresight on these issues, it's paramount because it doesn't matter until it matters, right? Kevin's smirking because he's the one who got in an accident here.
Kevin gives blood and then passes out cold and wakes up in somebody's backyard with a total truck.
That's a real story. That actually happened.
That's a real story.
Ooh.
Yeah.
I'm still paying double coverage.
That's rough. But I say, Stuart, all the time, like the guy who's going to find out in a year that he's got late stage 4 cancer feels fine right now. He's not going to the doctor because he doesn't have any reason to think he needs to.
Right.
But next year he's going to feel it. And when he feels it, then he's going to go, I better go get this checked out. And, in risk management, I say we got to get this done before that feeling arrives. Because once that feeling arrives, it's going to be too late. We need to do this now.
That in that pie chart, when people are bringing you on board, is it more reactive or proactive? Like percent of 100, is it you get brought to the table once something bad happens? Or are people coming to see you like, prevent us from this happening, please?
Well, thankfully, Kevin, and that's a great question. I would say 70% of the time it's proactive, which is awesome because it's far more effective. Now I'm in claim right now. It's a 6-figure loss where a company had the loss and then through a connection was put in touch with me, and their insurance company is denying the entire thing when the entire thing is covered. So good news, they're going to get paid, but that's fortunate for them because that doesn't always happen. And I have had rare instances where someone reached out to me with a claim and said, hey, can you help us? And I said, send me your policy, and went back and said, guys, I am so sorry, but no. If the policy says it isn't covered, then that's pretty much it. It's not covered.
Right. So at that point, there's nothing you can do. But the sort of forensic analysis or after the fact, the claim has been denied, review of that, also very helpful because oftentimes people don't have a Drew on staff to be able to say, no, this is incorrect, right? Your broker submits a claim, you get some blanket form denial letter from the carrier. You're like, well, shucks, just put it in the drawer. If you don't have someone on your staff or inside your organization that you can say, well, is this right? Help me assess. Like, is that exclusion actually exclude this? Let's parse through this. I mean, you may literally be leaving money on the table when some of these claims get denied and you're not challenging them or pushing back or don't know even what to say or who to say it to.
Yeah. And it's sad that, so you'll probably know this even better than me, Stuart, but nothing said in a mediation is admissible in court. It's all protected, right? So if you ever have the misfortune of sitting through a mediation with an insurance company that's trying to deny a claim and really just doesn't want to pay it, it can get ugly. The insurance companies have almost unlimited resources. They know this, and the business owners do not. They know this too. And they've got very subtle ways of saying like, hey guys, we want you to walk away with something here. We don't want this to be long and expensive and drain your bank accounts, and just, using these subtle intimidation tactics to try to get people to just back off and go away. And it's because nothing is admissible in court. I've seen some not so above board decisions and things be made. So yeah, you need someone that knows what's coming and they know what to do when it happens, because most of the time you get the denial letter and like you said, you're not an insurance person. You just go, well, I guess it's not covered. And most of the time the insurance brokers are going to agree with the insurance companies and say, hey, if they said it's not covered, then it's not covered.
Right.
It's just one of those things, because they have two juggling balls they're trying to juggle. They have to honor you as their client, but they also have to honor the insurance company that's paying their bills that they're selling for. So, they're in a really tough spot in that regard because they can't swing too far one way or the other. They got to do that balancing act, which I would never want to do. I just get to be fully on the side of the business owner and say, hey, I'm here for you. The insurance company, obviously, I've got a responsibility to be ethical and preserve relationships where possible. But I'm here to fight for you. I'm here to stand up for you and make sure that you get what's fair.
It's interesting because that issue of the tripartite relationship comes up in terms of the allocation of counsel, right? So there's an insured claim, the insurance company picks it up to defend and uses panel counsel, for example. And when I say panel counsel, I mean lawyers who have been approved by the insurance company to do work almost exclusively for the insurance company at predetermined rates. And in those instances, most of those, or let me say that differently. In those instances, those lawyers derive most of their business from the insurance company. And there's a big issue in the state of Texas that for most part has been resolved at this juncture as to who the loyalties of that lawyer lie to, right? And I never really, I won't belabor the issue here, but I never really thought about it in the broker perspective like you just presented it. The broker also has a divided sense of loyalty as you articulated, and I just never thought about that, which sort of highlights the value of a third party, fractional, neutral person to come in and say, like, I get that it says denied, and I get that your broker says it was denied, but let's look at that because that's a big number,
right?
And I don't think exclusion J actually applies here, and here's why. You need to read these definitions, and there's 700 of them, and there's actually a writer that amends the definition and all that stuff. And that's where folks like you are like, hooray, I want to read those policies, right?
Yeah.
Like, I'm not to make it sound silly, but it's kind of silly that you love to do that because that is mind-numbing work.
Yep.
But if you don't have the expertise to live in those documents and know how they work together and assess it all, you're at the whim of those folks who are telling you what it says.
You're right. And it can be mind numbing. I often get funny looks from people when I tell them what I do. It's like, oh my God, I'd rather watch paint dry. But it's the thing of it is when you get into it and you attack it from the perspective of, I know that what is being provided to this business is going to need work. And there are areas where they've bought this insurance and they're spending a fortune. And there are gaps in the coverage that no one knows are there. And it's not fair for someone who has done the work, as we talked about earlier, to build a successful business, to pay all this money, trusting people to take care of them and have their back. And then all of a sudden they just wave goodbye and keep the money. I'm like, I can't, the sense of justice. So when I'm looking through, I'm looking for those gaps, and it provides just a tremendous amount of satisfaction to me to know that, hey, I've identified this for them. We've talked about it and we've found the best possible solution. So they have a ground to stand on. So if they get that denial letter, I'm not worried about it because I know we have coverage and it's here. And, we've got a means to hold someone's feet to the fire if we have to make sure that money comes in when they need it the most. And there's no better feeling than you see a friend go down and you're the first person there to pick them up and say, I got you, man. Let's do this.
Yeah.
It's awesome.
Yeah. I get that. Go ahead, Kev.
You just schooled me on requirement versus exposure because I'm a specialty contractor and that's all I'm doing when it comes to insurance because I don't understand it to the level you do. So for me, quite honestly, it becomes a check of the box. Like, do I match my client's requirements? But I've never looked at it from a proactive exposure standpoint. And especially in startup mode, we were just clinging on for somebody to say yes. And it was hallelujah once somebody took us as a new client kind of thing. Yeah. But man, once we get a year under our belt, man, you're going to be hearing from me because I'm going to want to know all of these exposures that I'm walking into because a dummy like me that doesn't understand insurance to your level, I'm in the camp of, man, insurance is there for you until you need them. Like, I'm sure you hear that from a lot of people. Like, that is my opinion on insurance. Like, once I need them, they disappear. They don't cover. But I might need to look in the mirror on that because I'm not paying enough attention. And it's probably something that I inked that they're just saying, gotcha. Like, this is what you signed up for. And I think most typically people like me are listening to this podcast. That's why we need you because you're covering blind spots that we don't even see come.
Well, and to have a process or procedure in place to assess them too, right? Because you have the typical insurance risk management, but then you have the contractual overlay risk management stuff to it too. And I don't know how much of that, Drew, you do in terms of there's the insuring overlay to risk management, but there's the black and white boilerplate contract stuff too. How much do you lean in on those issues?
Oh, a ton. And so when you look at a construction subcontract, obviously it's broken down into a number of subsections. I typically don't get involved in the scope of work because I'm not a contractor. I work with a lot of contractors. That is my bread and butter at the time. So I have familiarity with the processes and things, but I lean on the folks that work for the construction companies to go through that scope of work and say, what are we specifically doing? Because if we're not doing it, we need to make sure that it cannot be included in this scope of work at all, because this contract and what we're agreeing to protect people for is going to be based on what's in that scope of work. So if something goes awry and it has nothing to do with what's in that scope of work, we should be pretty safe. We should be able to say, hey, we did our job well, and we're not going to be dragged into a construction defect claim, which those are always long and super painful. So, it's one of those things where if you can avoid it 100% of the time, you want to. But my focus obviously would be on the insurance requirements and the indemnity in particular, and looking at places in the contract where you find that. So, for example, cancellation. The owners say, we can terminate this contract for convenience. We can terminate it for cause. We can kick you off the job site, take all your materials and supplies, finish the work for you, or hire somebody else to do it. And the thing is, when you see those, it nowhere does it say that if we do that, you're released from any liability for what we do or for what the other sub does. In fact, what you've agreed to most of the time is to be liable for that in addition. So if they just get into a heated argument with you and throw you off the job site and then hire someone that's lousy, now you have to basically suck it up for those people and hope that they've got decent insurance, which if they're lousy, they probably don't. So it's going to come back to you and your desk, and they're going to say, hey, this is still your scope of work. You've agreed to indemnify us for anything arising out of, in any way connected to, resulting from your work on the project. And it's always neutral. It's not your negligence. It's not something you did wrong. It's just something you did. So if we can connect it back to something you did, you don't even have to be responsible, but you're going to start paying, and you're going to start paying immediately. We're going to send you a written notice and you have to defend us. So I look for that, and I edit that out. I look at the contractor says, oh, and by the way, even if we, the contractor, are negligent and that's the cause of the claim, you still have to defend us. So big red line there. No, you can pay for your own negligence. That's fine.
Let me put my lawyer hat on for just a second, because that is the issue of indemnity is a jurisdictional issue to some very large extent. So if you take a survey across the country of how different states are managing that, it shows up differently in different places and different spaces as to what you can and can't do. And so in some instances, I won't bore everybody with Stuart's 5-hour lecture on indemnity, but you have generally 3 different forms: broad, comparative, broad, limited, and comparative. And the language in there that nobody reads tweaks through, like, is this broad form, or is this limited form, is this comparative form, how does it manage, what am I supposed to indemnify you for, what are the triggers, etc. And in Texas specifically, there's an overlay that says, a statutory overlay that says what you can and can't do. So it's very complicated, but it's very important. Is kind of the point I want to come back to, is knowing what it says, what the triggers are, what you're required to do, whether or not it's enforceable, when it kicks in, how far it extends, all those things. Nobody ever pays attention to it, mostly because it's in bold letters and you're just scrolling, right? The non-risk manager is like, I just want to see scope and price. Scroll, scope, price, signature, or off and running. Whereas you have a huge, huge potential in those clauses to be roped back into something. And in some instances, those clauses don't thread through a CGL policy. The language doesn't meet up. And so you have a coverage gap for something you've agreed to do. So it's a real big risk issue in there.
Oh, 100%. And, excuse me, one of the things that I see in every subcontract within the indemnity sections, it starts with these words: to the fullest extent permitted by law. Okay. And I always tell people, legality does not define morality. They are not the same thing. Just because someone is allowed to do something legally doesn't mean that it is the right thing to do or that they should do it. So, when you're having these contract negotiations and they say, well, it's, the law allows us to do it. Well, that's fine. I live in a stand your ground state. And for anybody that doesn't know what that means that if I feel threatened by anyone, I am fully within my legal right to blow them away. I can do that. And it's the law says I'm allowed. I can defend myself from the feeling of being threatened. But I think all of us would agree it's not okay for someone to just pull a sidearm and start shooting people indiscriminately. Now, it's allowed by law, but it's not okay.
Yeah.
And that's an extreme example, but it gets the point across that, the law may allow for someone to say, you have to pay for all my bills, even when it's completely my fault. The law might allow that. I still think it's wrong. And I still think if that's what you're requiring people to do, you should not be sleeping well at night because you have no integrity. But that's just me. So, I look for those things. I look at the additional insured, which relates in a lot of ways to that indemnity and those claims. And they say, well, you have to have this particular form. Almost 100% of the time, they don't. And the certificates of insurance are the big deal too, because the entire industry runs on those. And if you'll look at a certificate of insurance right at the top, it says in big, bold print, this means nothing.
Correct.
It does not confer any coverage on anybody. You have to refer to the policies. You can't hold this up in court and say, well, the certificate says it's covered. The certificate's irrelevant. You can sneeze and wipe your nose with it. You'd have more protection if you printed it out and held it over your head in a rainstorm.
Just like a bond letter, right?
Yeah, it's wrong. And I see this all the time, and people think I'm full of prunes. You mentioned the residential exclusion earlier, Stuart. I've seen a certificate for a client that I have from before the time that I was with them. And the certificate says no residential exclusion. So I used this in a negotiation once, and I have the contractor's brokers on the phone, and we're talking. I said, listen, you see this certificate? Yes, I do. I said, okay, I have this policy too, because it's the one I reviewed when I won this client. And there aren't one, but two residential exclusions on this policy. I'll send it to you right now. Here you go. So you have an example of a certificate that is completely inconsistent with what the policy says that's listed on that certificate. And I would wager a good crisp new dollar that if you pull a random policy for any of your other subcontractors and compare it with their certificate, you're going to find inconsistencies every time. Every time. And that subcontractor, whether they know it or not, is in breach of contract. And I promise you, if something goes south, a clever attorney is going to find that, and they're going to notice that they're in breach of contract. And they're going to use that as a posturing kind of thing to be able to get what they need from the situation. And they'll be right. There'll be nothing we can do.
Yeah, I won't tell a story here, but I've had that case before where we were on the cert listed as an AI, but the policy didn't have the appropriate endorsement. So you fast forward that through and make a claim that we're not insured, blah, blah, blah. Like I've actually handled that case before. And if you're listening, you know who I'm talking about, and I won't bore you with how it all worked out. But that's not just a theoretical problem.
No, it's not.
7 years ago, I handled that case for a client, and it turned out as crazy as you might think it turned out. But
yeah. And look, what I have seen most of the time when a certificate is required, a contract is sent over, and someone on the broker's team looks at it and goes, okay, this is what the requirements are. They list that in the certificate comment section and send the certificate out. And, very rarely is it checked. Hey, do we actually have all of these things that are required here? Is that consistent? A lot of times it just gets sent out and no one checks. And, you go back and you go, hey, wait a minute, guys. Thankfully, we can't be held liable for what's on a certificate of insurance because it does say right at the top that it doesn't mean anything, but we're putting out information that's incorrect. So, that's on us. I think that's our integrity. We got to be able to make sure that if we're submitting something to somebody, the information we're putting on it is accurate. So yeah, it happens. And again, like you said, Stuart, because if I don't have insurance coverage, that doesn't mean I don't have the exposure. I certainly do, because I signed an agreement saying that I would back up all of this stuff. And my insurance company now doesn't have to back it up because the form stipulates that they don't. But I still have to back it up. So now it's just coming out of my pocket.
I'll be reductive a little bit, but I've contractually agreed to pay for that, irrespective of whether or not my policy covers it.
Correct.
There's a gap.
Yeah. 100%. So yeah, that's me. Another area that a lot of people, I think, skip over. And in fact, I'm working with a fairly small contractor right now, But, this guy is overpaid by probably $60,000 or close to it over the last few years for his workers' compensation insurance because all of his payroll was classified under carpentry. And when we went back, he's actually got a project manager that accounts for a significant portion of the payroll. They do mostly interior trim and cabinetry work. They do some painting, a little bit of snow removal to clean the job sites. And when we went back to NCCI, which is the rating organization, and did the math, it's like, holy smokes, man, you way overpaid for all this stuff. And, it happens on general liability as well. Typically, an insurance company, when they underwrite something, is just going to find the most expensive possible class code and put it in there. So, it could be years of overpaying because your general liability classes they work for coverage, but they're not the most favorable to you that could be applicable. Same thing on the workers' comp. Sometimes vehicles are rated improperly, and they've got them as long radius of haul when it should be medium or local, or they have the gross vehicle weights mixed up and they've got them in the wrong class of business. And you just see, people are overpaying for what they're getting. And so I like to go back and figure out how much of this can we recover. And typically on the GL and work comp, most states give you 3 years. So the current year plus 2 prior. And one business here in town, at my old office, they overpaid by $750,000. So, if you can hand somebody a $750,000 check, you just made a really good new friend.
What's the audit tail on that? You might have mentioned it, but do you have, as a policyholder, audit rights to go back and say, hey, man, in 2021, I think I had my classifications mixed up. I need to fix this.
Yeah, absolutely.
And recover premium?
Yeah. And
this is a reverse-looking problem, too.
Right. Yeah. So you as a policyholder can go back, at least on general liability and work comp. And you can go back on anything, really. I don't know, if the insurance company has any onus or responsibility to make a change on the other lines of insurance. But if you can demonstrate that what was insured wasn't properly rated and that they overpaid or they overcharged you, then I know for GL and work comp, I'm pretty sure they're required to make it right. And if you can demonstrate it, at least, refund the overpaid money. And then, of course, I don't mind using the court of public opinion as a little bit of leverage too, and saying, hey, if I've overpaid you by 100% on this property, and I overpaid you by 100% on this property, do you really want that to be your, word of mouth going around that this is what you did, and that you overcharged me, but you're just going to keep all that money even though I overpaid you? I don't mind saying that at all, because I feel like I'm giving someone an opportunity to do what's right, whether they do it or not, totally up to them.
Well, and again, as your position as a third party to the process, you have there's no qualms in saying that, because You're not worried about what ABC insurance company thinks about it.
Nope.
ABC insurance company 2x to client for no reason, and when we tried to fix it, they told us no, and we ended up in that doesn't divest you of future business, and so there's no qualms in saying it.
Right. And even people say, well, I do need to make sure that I don't make a bad name for myself out there in the insurance industry. But any insurance company that would say, oh, we won't do business if there's an unbiased consultant involved, think about the optics on that. That looks terrible.
Yeah.
We don't want someone without someone to come in here and mess up our Wizard of Oz thing we've got going on, telling people that the guy behind the curtain is pulling some strings, because it makes it look like they're up to something. So I don't think that's ever going to be an issue. And of course, the benefit to the insurance companies is I don't want anybody defrauding anybody. I don't want business owners to be trying to swindle their insurance companies by underreporting on revenues and underreporting on payrolls and not reporting claims that really should be reported. I think it's a two-way street, and there needs to be integrity and honesty on both sides of the table at all times. So I wouldn't help a business that I felt was willing to be dishonest in any way with their insurance company or anybody else.
Yeah, it's a good point. I think being the outsider on this conversation with, both of y'all are kind of consultants in a way, and sometimes you need to tell us what we need to hear, not what we want to hear, even when we're hiring you. And I think I know there's a specific story that Stuart was there for me. I flew out of state. Do you know what I'm talking about? You probably, now that I've said I've flown out of state, and you had to tell me like, Kev, you can't sign this. He was breaking it down in layman's terms. Like, Kev, if you sign this, this is what this means. And I had to walk away from a mega job, which was painful. But man, that's why we have y'all locked arms with us to prevent us from walking into a heap of trouble, because it's beneficial. I'm sure you've had a time or two where you were hired by somebody like me and then had to break some pretty unfortunate news, but it was news that needed to be heard.
Yeah, these things happen. I looking at a job by job basis. There's another area that I focus on a lot, and that is, if you think about a construction project from start to finish, the developer is going to find a spot and go, we're going to build something here. And then they are typically the ones that will buy what's called a builder's risk policy. And, it's intended to cover the entire project during the course of construction from start to finish. Once the building is occupied, it's put to its intended use. The builder's risk is gone. It's bye-bye. It doesn't do anything any longer. But there can be huge issues in that builder's risk policy. Most recently, I looked at a couple big OSIP projects, and the builder's risk excludes earth movement of any kind. So, if there's an issue because of something the excavator did, and there's damage to the project while it's under the course of construction, the builder's risk isn't going to pay it. Well, the issue with that is, so did the OSIP policy. So the OSIP policy excluded it. The builder's risk excluded it. And of course, all of the subcontractors on the job are going to have an OSIP exclusion on their GL. So we have the trifecta. It's just excluded all the way around. Of course, no one knows, because no one reads insurance policies, especially OSIP policies. They just sign up for the job. Hey, here's the manual. You got $50 million worth of coverage. We're all sharing it. Back your insurance rates out. Give us a credit. Done. You don't have a choice. Sign up. No one has a clue. No one gets the builder's risk. And so I hit the broker up and said, hey, I found this. I think we probably want to deal with it, because I don't want to have to call your client, or you to have to call your client and say, hey, by the way, we got a massive exposure here that's just bare naked nothing. And they said, oh yeah, thanks for bringing that to our attention. We'll get it sorted, and sent me the endorsement saying, we've got this covered under the builder's risk, and we're all set. I'm like, okay, perfect.
When the builder's risk policy, I don't carry it. And when I sign up for an OSIP, you're further removed from like letting me look at assessed risk under the policy. Like, okay, you did it. I'm going to assume that it's covered because you did it, and the owner's carrying builder's risk. I'm sure they took, no, just as much as you, the business owner, didn't look at your own policies, neither did the developer, and neither did the GC around.
Right.
What you've infused into that is just a gross assumption that it's caught somewhere. Someone has to be tending to the shop here. Someone has to be minding the policies and knowing that catch that you made exists to be caught. Otherwise, again, it only matters when it matters. I mean, building shifts because of the earth moves, and all of a sudden it's a full demo, and you're like, well, we need a $80 million solution. We don't have one.
Right.
We don't have one.
Yep. And that's what I have said for years. You mentioned the word assumption. The entire construction industry builds on a foundation of assumption with a framework of assumption. It's all assumption. And, you think, well, surely these multi-billion-dollar general contractors, they're savvy. They've read all this stuff. They don't miss any of this stuff. I'm like, no. Let me just put it this way for you. I've reviewed insurance for large projects with large national GCs, insured by large national brokers, with the best risk management company administrating the whole thing, and found gaps in the coverage. So it doesn't matter. The who is not important. It doesn't matter. There are people making assumptions at every single level. So the only way to safeguard against this is to actually get the information and read it. Because if you don't, I promise you nobody else has.
All right, Drew, this has been awesome information. I know when I'm going to reach out to you timing wise, but there might be a lot of people thinking like, when do I reach out to you? What's the best timing? What's the right timing? Maybe there's multiple answers. I'll just tee that up to you for an answer or answers.
Yeah, thanks, Kevin. It really just depends on what it is we're looking at. If somebody wants to take a look at what they've got in terms of insurance coverage and what's available to them in the marketplace, I really need 4 to 6 months before renewal, because I want to be able to really get in and assess what they've got, and then be able to find the people in the insurance marketplace that have the right relationships. And that's a whole other ball of wax, because if you don't understand the industry and how it works, I'll just put it like this: money talks. So, if I'm a broker that has $50 million of business with a given insurance company, I'm going to get a way better result with that company than someone that only has $500,000 of written premium with that company. I might have a completely different underwriter. My rates are probably going to be better. What I can do coverage wise is going to be better. So I've got to have time to identify those people and be able to bring them to the table for the business to say, hey, we're going to not just get one guy trying to swing all the bats, or one person. We're going to find out who's the best person for this particular bat, who's the one that's going to take this thing and hit a grand slam for us. And we're going to get all the heavy hitters swinging at one time and let them actually compete for the business, versus the conventional approach of, I just went to one broker or maybe two and said, hey, get me what you can.
Right.
Which basically whoever gets there first is going to be guaranteed to win the business. It's just a matter of which insurance company they put it with. So, 4 to 6 months is a good time frame for that, to be able to do just a great, stellar job. But if a question comes up and someone's looking at a contract and they go, hey, I don't have a clue if I'm covered for any of this. This scares the living daylights out of me. I wish I was wearing a diaper when I had started reading this. Call me anytime. Hit me up on LinkedIn with a DM, or call my cell phone, or shoot me an email, and just kind of run me through the situation. What are we dealing with? And there can be situations where we need to do something quick. We got to get something done. And it's not a matter of having 4 to 6 months to do it. It just needs to be done, and it needs to be done as well as it can. So there are a couple different ways to get involved and to help. And it may be a situation where we deal with this immediate issue right away, and then we calendar for a couple months down the road to say, all right, once we get to this spot, we're going to dive into everything else. It's going to be, the timing's going to be right. And, it just has to be done on a case by case basis, because there's no one size fits all solution.
Yeah. And I will say, if you're not following Drew on LinkedIn, I don't know where else you live in social media space, but if you're not, go follow him now. Let me give you an opportunity to pitch the ways to get connected with you specifically for listeners. They can say, oh, okay, grab your pen. I'm going to write that down. Here's your handle on whatever. I don't know. I'm saying old people things right now, but let me say it easily. How do we get in touch with you?
LinkedIn's great. I'm always on LinkedIn. It is my social media platform. I don't really use anything else because it allows me to actually illustrate the point of, what I'm trying to share, and give examples and stories, which I do pretty frequently. So yeah, that's the best way. Of course, if you want to shoot me an email, it's real easy. It's Drew, my name, @JeffersonMaxey. That's maxey.com. So yeah, that's it. I'm not big on social media other than LinkedIn. That's my platform.
I saw the phone number there, and I was rooting for it to be Mike Jones' cell phone number, 281. Nope. No, might not ring a bell, but every time I see that, I'm like,
Drew doesn't get that joke. Okay. Yeah.
Nor shouldn't he.
Here, I'll read you in. There's a rapper from Houston who every time he would release a new track would put his cell phone number on there, and he would say, call Mike Jones, and then he would say cell phone number. That's the joke that Kevin and I are read in on, and now all of our listeners are too.
I had no idea who that was.
Yeah. Mike Jones. I think there's a few people right now who heard that, and they ran through Mike Jones' cell phone number in their head. That's how locally popular it was. But in any event, you didn't need to know that.
No, good to have context.
Yeah. All right, Drew, this has been awesome, man. I appreciate you thinking through things, chatting through things with us, providing some additional avenues of information and support for our listeners. If you guys need anything, now you know how to get in touch with Drew. And until we see you guys next time, you guys stay out there and keep moving mountains.